and welcome. I want to take a minute to go over this amazing console that we will be using so that you get the best experience during the webcast. This console is fully customizable. You can reshape, resize, and move all of the windows. The widgets for today's webcast are the presenter slides and media player, where you will view the webcast presentation. We have the Q&A to ask questions that the presenters will be answering throughout the webcast. The speaker bio will give you information on the speakers and links to contact them. And in the resources, you will find all of your goodies like your slides, your handouts, and your giveaways. The group chat is where you will chat back and forth with the other attendees. And if you want to tell somebody about this great webcast, but you don't want to leave and miss a thing, that is not a problem, because we have a suite of social media icons to choose from, so you can tweet and post about this webcast. You can even invite a friend with the Refer a Colleague widget, and you never have to leave the platform. The Help widget will open a new window to help you with technical difficulties that you may experience, and the survey will be used at the end of the webcast to let us know how we did, what we can do better, and topics that you would like to see in the future. To clean up your console for better viewing, simply click on the widget for the window that you would like to close. As a few last details, please remember to sign out of or disable all of your pop-up blockers. This is an audio broadcast, so to get the best sound quality, all of the sounds for this webcast should be coming directly through your computer. We are recording and you will be receiving a copy, but you'll want to stick around for the live Q&A and special offers at the end. We are excited to have you here today. Please sit back, relax, and enjoy this opportunity to mastermind with your Originator Connect network.
Well, hello and welcome to the next installment of the Originator Connect Network webcast event series. We're very excited and privileged to have some awesome information for you guys today about how to help those customers who don't quite fit that rigid QM, FHA, VA, and conventional lending box. And we've got a couple of great experts joining us for today's program that are going to be giving us a ton of information. Guys, just remember this is a very, very interactive platform. We want to encourage you in every way, shape, or form to interact with our speakers, ask tons of questions in the Q&A, especially those questions that really drill deep into the specifics of the topic, scenarios that you want to get answered, the pre-qual assistance that you need right now on the buyers that don't fit the QM box. Also, you can interact with your peers across the country using the group chat, and it's a great way to share ideas and success stories if you want. So without further ado, my good friend, Will Fisher with Citadel, the VP of Sales and Marketing for the national organization, one of the field leaders in the category of non-QM or non-outside Dodd-Frank lending programs. And Will, you want to introduce your colleague as well, and then I'll let you guys take off with the conversation and share all that great information I know you got stacked up for us.
Sounds great. Thank you, Eric. And thank you, everybody, for joining us today. It looks like we have about 124 folks out there currently. Good morning and welcome, and maybe good afternoon if you're on the East Coast. Sitting next to me here is Nick Harvey, our area sales manager inside sales team. Good morning, Nick. Morning. Thanks once again for joining us. Today we're going to go over outside Dodd-Frank. You know, this is our third presentation now through this video forum here, this webcast. And if you'll know, in our first one, we went over some very special products that Citadel Servicing offers, and these were our main offerings. And we wanted to get everybody familiar with them, what really sets CSC apart. In our other webcast that we ran, we covered our whole product, soup to nuts, so everybody could really get familiar with CSC. But now we're going to dive into another area. We're going to do a deep dive on outside Dodd-Frank. And this is a very special product at Citadel. A lot of companies out there maybe have different, smattering of different offerings and on different rate sheets perhaps. What we've done here is we've created a whole product category around it, and we're expanding it, seems like every month. And we plan on expanding it even further here in the coming months, especially into 2019, especially in this high interest rate environment that we're going into. This product makes sense. It's going to help give you more volume over the next couple months and the next couple of years, and introduce you to a new segment of lending that maybe you weren't familiar with before. So with that said, I think we'll move on into a poll question. All right. Looks like some of the answers are already coming up here. And basically, have you seen a decrease in the number of prime borrowers you work with? Yes. So I guess you could chop this one up to, we don't ask questions that we already know the answers to. So there you go, 62%. So I think that this is going to help a lot of folks today in what we're going to discuss. Moving on through, oh wow, that keeps going up, 71%. Interesting. Okay. Outside Dodd-Frank. Let's talk about Dodd-Frank for a moment here. We all know why it exists. Probably many of you were part of the mortgage industry back in 2000, early 2000, 2008, 9, and you saw what happens. Bottom line is, I'm not going to spend a ton of time on this, but it's there for protections. It's to protect the consumer, especially on 1 to 4 unit properties, especially on owner-occupied properties, and to help protect the U.S. taxpayer so we don't have to bail out big banks, insurance companies for making bad decisions on risky type loans. And it sets forth, more importantly for the lending industry, for where we're at, the rules of the road of what can be backed by Fannie Mae, Freddie Mac, FHA, the GSEs, and what cannot. And so part of Dodd-Frank, or our outside Dodd-Frank product, we're going to talk about loans that can't be, or that are not afforded those protections, and how we make loans inside that, and how it does not lean on the U.S. taxpayer or the government whatsoever, and we can keep moving forward with it. So let's get into what else is going on with Dodd-Frank. Basically, as I just mentioned it a second ago, the purpose is to eliminate future taxpayer bailouts. The results of this were a lot of rules, secondary market that's independent of government, or we wanted a secondary market that's independent of government oversight, and many worthy borrowers are left out of the housing market. And so that's what this product's going to help you bring back into the housing market. Borrowers who are worthy, but maybe not meet the strict, rigid standards of some of the GSE products and GSE rules and guidelines. So for Citadel, what is outside Dodd-Frank? What do we consider that product to be? And it's a couple different things. Number one, the regulations. There are some regulations that we don't follow in outside Dodd-Frank. We're going to make loans with interest only. We're not going to necessarily follow Appendix Q. The property types are going to be unique property types like mixed use, and then multi-units, units above 5 units. Also, things that are going to fit in here are stated income. How does stated income work? How can we put that exactly and still meet certain standards and certain rules? Well, you have to understand with outside Dodd-Frank and with Dodd-Frank in general is they laid out a rule of what is a qualified mortgage. And you have safe harbor and you have rebuttable presumption. And then everything that falls outside of that is going to be your outside of Dodd-Frank or non-QM especially. So that's where we're operating. Now, we are going to follow certain rules and try to meet certain items of ATR, especially on 1 to 4 unit properties, and we are actually going to be stating income. But as far as the documentation we're going to be providing, depending on what we're going to be calling this particular type of loan, whether it's a business purpose or whether it's a debt service coverage ratio loan, DSCR, is going to determine what we actually need for documentation. So let's keep moving on through. The two biggest ways to qualify a borrower in our outside Dodd-Frank product are either going to be calling it a business purpose loan or a DSCR loan. DSCR is going to be debt service coverage ratio. So here's a question for you. Do you guys know the difference between a business purpose loan and a debt service coverage loan? All right, you got some seconds here. 58% say no, 41% say yes. All right, well, let's get right into it then. So for a DSCR loan, what you're going to do is have income from the property help to qualify the mortgage payment. With a non-owner type mortgage or investment property, we're not looking to cover the borrower's personal debts, their credit card, their car payment, their owner-occupied property. We're solely looking to qualify the subject property. Now, that's going to be your rental property. As long as we have enough income from rents to cover that PITI or PITIH, you're covering. So debt service coverage ratio is going to be the net operating income from the property divided by the debt service, or the total debt service, or the total debt on the property. We're looking for a ratio of 1 or higher. Okay, that's what's preferred. Obviously, that covers the debts, your cash flow. We're not, as a lender, not worried about it. If you're below that, though, and there are other mortgage lenders out there that will go below that. Some need reserves. Some have other criteria you need to meet to be able to do that. Maybe it's a credit score or whatnot. For Citadel, we ask that you have reserves. We want you to have reserves to make up the difference for what can't be covered by the debt service on the property. So hopefully that has cleared it up or made it a little bit more well-known out there of what you're doing when you're covering the mortgage debt on the property. Okay? You need the cash flows. You need the income, projected income, to cover that. Now, you can do that a couple different ways. You can do that with canceled checks. You can do that with just a lease agreement. So there you go. You could do it with your own assets. If you want, you could also do it with your own income if you want to qualify that way. With CFC, if you don't want to use your own income to qualify, if you want to use other items like just the debt from, or the income from the property or assets, then we're going to ask that you show different documentation and not necessarily your own personal income documentation. Next up, non-owner business purpose. Nick, you want to talk to that?
Sure. So this one is another stated income loan for the ODF product. We call it non-owner business purpose. We're doing these on purchases. It's stated income. We don't need any assets to cover like on the DSCR, and it's really good. It used to be, well, we're looking at it as to improve, maintain, or acquire the property. So we're looking more at purchasing on this program, whereas the DSCR would be more towards refinances. But this is a great one where you can help your borrowers grow wealth, 1 to 4 units and multi-units where you can do a stated income. You're just basically showing us that you have closing costs and down payment, and you're good to go.
Let's talk about some of the benefits of calling a property a business purpose property, okay? Well, it means we don't have to follow certain guidelines. There are no trade disclosures for these properties. We're treating it as a commercial property. There's no income requirements. Okay? You're not going to supply income documentation for these properties. You're going to state enough to cover the debt service on the property and be at a 50% DTI on paper. All right. Wage earners can qualify for this. Self-employed borrowers can qualify for this. There are no reserve requirements, asset or DSCR requirements. This is completely outside of that DSCR and that Dodd-Frank box. Some other details. Non-owner occupied properties are the main driver for this, 130 units. And as Nick mentioned, for it to be qualified as a business purpose property, it needs to fit one of 3 of the criteria. It's for acquiring, for improving, for maintaining the subject property. If you think you're going to pull out, we don't even allow at this point refinances on this because we're getting too many people who are asking to take cash out on the non-owner business purpose to apply to personal funds or personal debt. That's not what it's for. So for Citadel, it's for purchase. And if you're looking to purchase a property, non-owner occupied, you can do it as a non-owner occupied business purpose and avoid TRID, avoid providing income documentation for that property. We'll do this up to loan amounts of $5 million, up to a 70% LTV or CLTV as well. And let's take a look. See what kind of questions we have here. Okay. Media player question. All right. When doing mixed use, can you use the commercial income for a DSCR calculation? Can you use income on a ancillary unit? Okay.
Yeah, so on a DSCR calculation, you really wouldn't even need to do it that way. If you're doing a purchase, you do it as a non-owner business purpose. That way you don't have to use income. You're going to state enough income to cover all the income that you're receiving, but we don't have to verify it. If you were doing a DSCR, you'd show me lease agreements, and then we would go off lease agreements to offset that if you wanted to. But it probably would be structured as a non-owner business purpose. That would be the best way to push that one through and get it done.
Okay. Moving on. How do I find prospects for these loans? Market. You got to market to these folks. There is a business purpose community out there, folks that are looking for this lending. I would team up with commercial real estate agents to find out, where they're getting their money. Show them the rates that we're offering. Show them the rates that you can offer. I guarantee you're going to find a very eager audience. Let's put it that way. CFC and some other of our non-prime lenders have some of the best rates out there for this product. More importantly, we don't have a prepayment penalty on this. Many other lenders have a balloon 2 or 3 year prepay. We don't. So take advantage of that. It gives you a very strong advantage out there competing against other hard money or commercial lenders. Let's see here. Questions? Not seeing a ton of other questions. A lot of the other questions are saying, speak up. All right, so we'll do that then. Oh, what's the minimum credit score? Great question. The beautiful thing about the outside Dodd-Frank program, we can do credit scores below 500. That's right, below 500 credit scores. Now, in our outside Dodd-Frank product, not only do we offer non-owner occupied and a second home, you can also do owner occupied. Now, who would take an owner-occupied outside Dodd-Frank loan? In that type of scenario, we would need income documentation. You would have to qualify at a 50 DTI and all that good stuff. However, we will allow credit scores below 500. Now, they are case by case, and they may receive special pricing, but we do offer them. So there's that. All right. Let's keep moving on through. Mixed use. And I think we have a video clip for that.
This whole area is just booming right now. Mixed use, live, work space. Yeah, it's just a big, giant, raw space. Unreal, look at those windows. Take a look around. Wow, you can run. Incredible.
This place is great.
A lot of space.
Maybe this is a little sunken living room.
Sort of Dutch-Japanese feel to it. If everything's low to the ground, a tatami room. Is this all here?
Yeah, that's the floor.
Okay, but can we get in it?
Sure.
You still want to do a screening room?
Absolutely.
Why not?
I don't think we even need to discuss that. I mean, we'll take it.
Oh, great. Okay. Well, let's see. So we need first and last, then a full month deposit, and that's $5,000 a month.
What's $5,000 a month?
For the loft, it's $5,000 a month.
We just want this unit. We don't want the whole building.
No, the actual unit, the loft, all the space, $5,000.
I thought it was going to be like $275.
Did somebody say $275? I don't know where that's coming from.
We can give you $400 a month.
Perhaps you'd like a studio loft.
So, when you're looking for borrowers, probably not the borrowers you're looking for, but it's a pretty funny video nonetheless. So for CFC, we are doing more and more mixed-use properties. For this, we're looking for properties that are, going to have potentially commercial downstairs, bookstores, things of that nature. What we're trying to avoid, or currently we're not doing, just so everyone's clear, anything with heavy chemicals. So that's going to be dry cleaners, probably food service businesses such as restaurants, and then also anything to do with oil and gas. If you stay away from those three, we're pretty safe. A lot of the mixed use that we're seeing are going to be folks that have multi-units above, above bookstores and law firms, things to that, even hair salons down below, small businesses down below. What are you seeing, Nick?
Yeah, we typically are seeing the mixed use being like there's an office space or commercial unit down below, a couple units up top, or even just one unit. If it's got a bed, we're going to entertain it. We also see some, you used to call them hobby farms, which make it like kind of hard to classify on that. we would say that's a mixed use, even if it's not income producing, and we can do some of those in there too. But typically you're seeing that, 2 to 4 unit with the commercial influence down below, and those are really the ones we're looking for. Anything that's a 5 unit or more, we're going to consider that a mixed use and put it into that pricing structure as well.
All right. Interest only. So if you've watched our videos before, you'll understand, actually, here's a poll question for you. How often do you get requests for interest-only loans? Let's start there. All right, the answers are coming on in. All right. So we're getting everything from often to not very often to never. And that's to be expected. The market was very heavily tilted, I think, towards owner-occupied, and a lot of people want a 30-year fix. What you're going to find in folks looking for an outside Dodd-Frank loan or a commercial-type loan, non-owner, they may be looking for, maybe it's a short-term investment, and they want interest only, or maybe they want to maximize their cash flow, and they want interest only. They're not maybe necessarily interested in paying off the whole loan. They're more interested in the cash flow for a certain amount of time, and they'll let, hopefully the increasing values, hold them steady there. So we do offer an interest-only product in our outside Dodd-Frank, and it's a little bit different now than what's offered in Maggie or our non-prime product. In those products, you have to qualify off the fully indexed rate, fully adjusted rate. But in ODF, it's different. As long as we're, basically DSCR qualifies off the IO payment for a non-owner occupied property in interest or an ODF. So anytime you're doing an ODF non-owner occupied and you're using DSCR, you qualify off the IO payment. Now that's completely different than our Maggie and our non-prime product. And it makes it very special because now it's back to the kind of traditional way of qualifying that we're all used to from the early 2000s of qualifying an interest-only type payment and borrower. So with the IO in ODF, look at a couple things. It's a 5-year IO, an 8th adjustment to the rate, 5-year hybrid ARM. You can change the fixed period to a 7-year for an additional 8th. We will do 30-year on a case-by-case basis on our ODF product. It's not usually offered. CSC ARMs are, your typical ARMs, well, typical for us, 226 are the caps. And then for all FICO and all occupancies, we will do IO. However, only on the non-owner occupied can you do the IO, the actual IO payment, initial payment to qualify. For loan amounts, I saw that there. Our minimum loan amount on our ODF product is going to be $250,000, and you can qualify off the first principal and interest payment. All right, moving on through. I think we're going to entertain some questions now. So let's get to it.
Well, we'll read through a few of those questions, Will. I'm going to hop in here, guys. One thing I want you to be thinking about is as you guys are watching this presentation, as Will and Nick are going a little bit deeper into the meat of these products and how to use them, also start thinking about how and who could benefit from this stuff as you as an originator. Who are the customers that you aren't serving now who could be served by these programs, and who are the people that could introduce you to them? One of the questions that's not 100% relevant to this exact section, Will, but one of the questions that kept coming up is where do we get these loans? Where do we get these loans? Where do we get these loans? We might want to address that one a little bit more towards the end. But have you picked out a couple of good questions about the interest-only ones that you want to respond to right now?
Let's see. They're kind of all over the place. What product is used for rate, I'm going to say rate and term refi on non-owner occupied 1 to 4 unit? What LTV and what refi? Nick, you want to hit that one up?
Sure, yeah. You can do our non-prime program or ODF on this one. It's a non-owner, so you're going to get the stated programs in the ODF, and then also if it's a non-owner, like Will was saying, you can qualify on that first initial interest-only payment. So that would be probably where you'd want to put that one, because then you're having a lower payment and easier to qualify. That's where you'd probably be on that one, and then you're just looking on the rate sheet to see what LTV they have for their start rate. Start rate's around 6.625 and goes up to 7.5, depending on what your LTV is.
All right, I'm going to try and lightning round some of these questions here. Is your business purpose program for any products or only with prepaid? Actually, there is no prepayment penalty on our outside Dodd-Frank product except for one scenario. And that one scenario is when you've recently listed your property for sale. If it's been listed inside the last 6 months, we will ask for a prepayment penalty. If you are asking for something that's outside the box, potentially a 5 to 30 unit, in any type of special circumstance, we may have a prepayment penalty. But for our plain vanilla outside Dodd-Frank product, which is kind of strange to say because most folks this is completely Wild West, but for Citadel this is our everyday product, there usually is no prepayment penalty. So it gives you a big advantage out there when you're competing against other companies. When do we anticipate Ohio licensing? Not in the foreseeable future. We are growing at a very large clip. We've got about 38, 39 states right now. We are looking to bring on New York here soon, and a few others potentially, but Ohio and some of these others, they're going to be a little farther down the road. Do you offer these programs on borrowers who have recent credit events like short sales and foreclosure? Nick?
100% we do. It's a slightly different rating on those than we would in our non-prime program. In ODF, if you have a 30, 60-day late, it's not necessarily affecting your rating. It's already adjusted into the pricing. If you did have a 120 late, Citadel would consider that to be a foreclosure, and then you'd have to make that current, and then you could do the loan in there.
All right. How do we make up the shortage on the DSCR program if we're not covering? Nick?
Yeah, so that's where you're going to look at that. There'll be a quarter hit to the rate if they're under a 1-to-1 ratio, so they're negative cash flowing. That's where we're looking at 60-day seasoning on their assets to cover that negative cash flow, and we'd be looking to cover it over 60 months, which is the 5-1 term.
All right. Do you allow the broker to sign up and do only commercial and non-owner occupied? Well, it depends. Obviously, we want you to do our whole product, and we think our whole product has value for you. If you are an NMLS licensed mortgage broker, you've got access to our full suite of products. We will eventually allow commercially focused brokers who may not be NMLS approved to use this one product. We're setting those guidelines up internally as we speak, and we hope to offer that product out to commercial mortgage brokers pretty soon. But as of right now, you need to be NMLS licensed. All right. What is the term for the IL loans? Nick?
Excuse me. So an ODF, you're going to do a 5-1 or a 7-1. If you're doing a stated loan, it doesn't really matter if you're doing it as a 5-1 ARM and then adding on the 5-year interest only, because you're stating enough income to cover the adjustment. And what I mean by that is we have our 226 adjustments from the 1-year CMT. So if you're doing an IO, at the time that that IO comes due or is done, it goes to the ARM rate. And if you're in a 5-1 ARM with a 5-year IO, you're going to have to qualify them on the step-up of that 2%. If you're doing a stated loan, you're not going to have a problem with it. In other programs, you would add on that 7-1 ARM for an 8 and then do the IO. So that way, when that 5-year interest only is up, you have 2 more years on the fixed rate, so you don't have to qualify on the step-up. You can qualify them on the note rate.
All right. Who's the best type of customer for this product, and where's the best place to find them? Great question. Well, you're going to be looking for people who want to invest in properties, people who want to buy investment properties, non-owner. I would talk to realtors. I'd start with commercial realtors. I would even talk to regular residential realtors in areas that have multi-unit properties. I would start there. The same way that you go after your regular borrowers. I'm sure a lot of people have email campaigns. certain blast campaigns and whatnot. Instead of focusing so much on just the regular borrower, just residential borrower, maybe you're looking more at businesses. A lot of businesses listed online. There's a lot of, in certain high population areas, smaller cities, little towns where they have town centers. There's a lot of multi-use properties that you can find. So I wish I had a better answer for you on that, but I would start with real estate agents who deal with those property types. Show them products that you have at hand, and I guarantee you they're going to find a way to get you a few borrowers. Let me just hit a couple
Hey, Will,
here.
can I jump in on that one real quick here, if you don't mind?
Please do.
As a business development, sales, and marketing coach, a lot of what we do is talk about different strategies to attract the different kinds of borrowers. One of the best sources for anybody who's a real estate investor who's going to do a lot of these deals, or for anybody who is a business owner that would have these types of misused properties that are a perfect fit for this ODF program, would be accountants, CPAs. And those are easy to meet through networking groups like the Chamber of Commerce or a BNI, or even some of their trade associations that they meet regularly because they have to do regular CE. So that would be a great opportunity to attract a number of referrals when you have such a great product like Citadel offers for those types of self-employed. Remember, these guys all have complicated tax returns, right? One of the reasons they're using an ODF program is because they don't want to jump through all the paperwork of 1,000 pages of tax return in the conventional lending process anyway. So just keep that in mind, audience. If you're looking for a really good resource to attract a bunch of this business on a regular and consistent basis, CPAs are probably one of your best sources of referrals for that.
Great. Next question for us is, are we licensed in New Jersey? Yes, we are. So please reach on out and we'll get you hooked up with one of our account executives in New Jersey, or who services that area, and get you all the products you need and show you how to structure these loans to get them into CSC. All right, let's see here. Next up, we have foreign nationals. Let's talk about our foreign national program. It's definitely one of our more popular programs here at Citadel, and we're focused on foreign national for non-owners for 1 to 4 unit. We'll let you do those as non-owner occupied or second homes, and we're taking care of borrowers all over the globe. They're not from one country or another. They're really from all over. We're really proud of that, and we do foreign national loans all over the United States. They are very popular in our coastal areas, that's for sure. And then we have a maximum LTV on those of 70%. Through. The one thing that's really neat about our program, we don't have any points on this program. We don't charge any lender points on this. Our rates start in the 5s, 5.875 to be exact. There's no prepayment penalty on it. It's a 30-year amortization, and you're completely stated on the income. That's right. We don't know what a Chinese W-2 looks like. We don't know what a Russian W-2 looks like, and we don't need them. So what you want to do with that loan is you're not going to be putting a Social Security number on there because the borrower is a foreign national. They're not going to have U.S. credit. We're not looking people with a temporary work visa because that's not a foreign national to us. Foreign national is simply somebody with a passport who wants to buy a home here because they think it's a great place to come and visit a couple times a year, or maybe they see it as a great investment property and something they can make some money on. So we try to keep it as easy as possible in our foreign national program. And Nick, is there anything I missed on that?
No, I just would touch maybe on the fact that it is stated, and we're not using, we're just getting a letter of credit from their banking institution. Mr. Smith's been banking with us for 6 years. It's a good standing. That's what we're using for the credit reference, so we don't need an international credit report or anything like that.
Your foreign national program guidelines seem basic and easy, are they? What do you think, Nick?
They're pretty simple. I mean, you have 8 items to submit with. You're making sure that you get your letter of credit, like I just said, and you have that closing costs and down payment wired into escrow 72 hours prior to funding.
It doesn't get much easier than that. We try to keep it really simple, and there's no prepayment penalty on those as well. Brandon Call. So this product is our non-owner, or I'm sorry, mixed use, not for restaurants, dry cleaners, gas stations. Nick, what have you seen around that?
Yeah, correct. The dry cleaners and gas stations has this material. We're going to not like those. Restaurants, depending on the setup, possibly could be maybe it's something down below, and then up top there's units. That might be something that flies, but the other two won't go.
If you ever have a question about what products we will or won't do, or property types we will or won't do, I would encourage you all to reach out to your account executive. That's what they're for. The one overlying theme with all of non-prime, whether it's non-prime all day or outside Dodd-Frank, there is no DU and LP. We take great strides to make sure that our account executives are highly trained to answer all your questions and help you structure your loans. They're not there to just price a loan for you. They're there to tell you, what income should I use? How much of it should I use? Will these types of borrowers qualify? They're basically your Sherpa through getting this loan done. So use them, because they will help you, and they will help you find the borrowers you need, help you structure the loans, and help you get them funded. Let's see what else we have. I've recently become a Citadel-approved broker. Where can I get a complete written underwriting guidelines for all your loan programs? So, once again, our underwriting guidelines are provided via your account executive. We will provide you matrices and niche sheets that go into some depth, and our website under the resources tab will provide you a lot of depth on our programs as well. As far as a hard guideline, that would be your account executive. If you have any types of questions, they should be able to answer all of them for you. All right. Is your non-owner business program ARM products only with prepaids? I think we answered that already. And how do I find out who my account executive is? Reach out to CSC. We have a web page called Find an Account Executive. Sales@citadelservicing.com. Just let me know what company you're with, what area you're located in, if you're not signed up already, and we'll get you in touch with an account executive. We do have an AE page on our website to help you find an AE as well. All right. Here. What's YSP on all your products? Nick?
Yeah, so we don't do a direct YSP. We offer borrower paid as a standard broker package. We also offer a lender paid compensation, which is two options there. If you select a loan by loan, you get two options. You can do a half to the rate for a 1 1/4 lender paid comp, or you can do a full point to the rate for a 2% lender paid comp. But it's straight, to the rate to the lender paid. It's not a YSP.
Okay. No credit scores in the U.S. If you are a U.S. citizen, we do require 2 to 3 credit scores. We ask to show us 3. If one comes up zeros, we can work off of 2, but you do need a credit score if you are a U.S. citizen. If you are not a U.S. citizen, we do not require a credit report, a U.S.-based credit report. Any country restrictions for foreign nationals? Nick?
Usually not. I mean, if they're on the OFAC list, we're not going to do it. And then the countries that are having that really high inflation we're seeing, we can bring those in, but those are going to be in a case-by-case depending on what that fluctuation is, so you'd have to address that on a case-by-case basis.
Okay. What's the EPO on these products? With all Citadel products, even though we don't have a prepayment penalty, we would like a minimum of 6 months to a year of performance. Look, you're our partner in this, and we're yours. However, if we can't get performance out of the loan, then we can't stay in business, and that's really where it's at. So if you want the opportunity to offer these products to your customers, and now that's whether it's us or any other non-prime lender out there, we need the loans to perform, and perform at least for a certain period of time. So while we don't have a prepayment penalty, we do ask that you try to not refinance your borrower for at least 6 months to a year preferably, as this helps us get more aggressive and innovate more products and bring them out to you guys. So I hope that helps. Is there any foreign investment tax on foreign nationals?
There's not.
There's not. Right. And let's see here, what else? Working with CSC. We'll cover this quickly, and we'll come back to questions. We manually underwrite all our loans. If you guys didn't know this already, a lot of non-QM, non-prime lenders like ourselves, we're all manual, 100% manual. We have an amazing staff of underwriters who are highly trained. They know how to put pencil to paper. They're not reading off a couple conditions, spit out by DU or LP. These are folks that are going through the loans and they're finding, the diamonds in the rough. There's going to be sometimes loans that come through that maybe could have been packaged a little bit better, and we can find ways to make certain loans work, and we'd love to work with brokers on this and help you find a way to make a deserving borrower a loan. We look closely at the LTVs, credit scores, and the property types. Obviously we want borrowers to have skin in the game. The more skin in the game they have, the better chance we have of avoiding the 2008 all over again. So it's all about skin in the game and a decent borrower with a decent property. Appraisals and BPOs. We adhere to all the regulatory appraisal and compliance statutes. As a matter of fact, for our mixed-use type properties, our property types north of 5 units, we have a specific commercial appraisal tab that will tell you exactly what kind of appraisal you should be ordering for your property type. It lays it out in great detail, so please refer to that and your account executive when you are going to order an appraisal that is not your standard issue URAR. BPOs provide us most up-to-date pictures. A lot of people ask, why do we order a BPO? Now, we don't order a lot of BPOs, as many as you think. As a matter of fact, it's quite a small percentage, actually. However, we do need a BPO. We also may need it if there's been recent weather events in that part of the country to confirm that the property is still there, or sometimes there's just not enough data to make a decision. So we'd like the BPO to give us a little assistance there. But it's very rare that we do order them when we do. We service our own loans. A lot of folks may not know this, even though it's right in our title. We are Citadel Servicing Corporation. We service all of the loans that we fund. And this is big. Your borrower, after they work with you, is not getting shuffled around to 5 different servicers, and they're note owned by 3 different companies. With CSC, it's a really easy process. What you can do is rest assured that when you tell your borrower, yeah, we're going to be doing this loan through Citadel, and once it funds, you're going to be making your payments to Citadel. Believe it or not, that can give them a lot of confidence, and hopefully a lot of confidence to stay with you as a broker and work with you on more properties they're looking to purchase. It's easy to become an approved broker with Citadel. All you have to do is log on to our website and under the tab, become a CSC partner, and they'll guide you whether you want to become a correspondent or a wholesale broker, how to do it and what our requirements are. The nice thing is we do not have a financial requirement for becoming a mortgage broker with CSC. What else are some of the benefits? We
don't pull credit. We don't run convergence. We're going to match you up on NMLS, and you're good to go. Usually it's 24 to 48 hours. So if you have that first loan coming in, you can get that process going and submit your loan at the same time that you're processing your broker application, and you can get it all done at the same time.
Okay. Missouri. I have a question about Missouri. Unfortunately, we are not in Missouri at this time, so we cannot do Missouri wholesale or correspondent. Do you have a product for 13 units, small apartment, 60 LTV, with a qualified buyer, non-owner occupied? Nick?
We do. That sounds like a non-owner business purpose with a mixed-use influence. That'd be something you talk to an AE. We'll get you some pricing on it. Definitely something we can do.
Do you offer loans that are pure commercial to deals in states that are not licensed? They're not licensed in. Not at this time. If you are not licensed in that state under NMLS, we can't do or have you be a mortgage broker yet. We're working on that. But do we do pure commercial? I would say that some of those multi-units and multi-purposes are pure commercial, so yes. Got a long one here. I have a borrower who would like to purchase investment property but is self-employed and we cannot show all his income. He rents his personal home and does not own any other properties at this time. What product can I use to qualify him? Grab that?
Yeah, scroll back up on that. Was that an owner-occupied? Who's trying to buy a new owner?
He wants to buy an investment property.
Sure. Yeah, so again, if you're self-employed, you could do a bank statement deal where you're avoiding using taxes. That's in my non-prime program. But if you wanted to go truly stated on an investment, again, non-owner business purpose, just stated income, they're going to show enough for closing costs and down payment. and you're good to go. The one thing on that is that you're limited on the LTV to 70%, but you're around 7.25 for the rate. Par pricing, no points to us. We just have our admin at $12.95.
All right. For foreign borrowers, do they have to be present at closing, or can they close in their country? Go for it.
Yeah, they do not. They can close at an embassy in their country. That's usually what happens there. We also can do, sometimes we'll do a power of attorney to have someone here that can sign for them. But there's definitely ways to do it. They do not have to be here.
What about U.S. citizens that are living and working overseas? Can they use your ODF to buy vacation or investment properties stateside? Absolutely. U.S. citizens, though, they're not going to qualify as a foreign national. They do have to qualify if they are a U.S. citizen as a U.S. citizen, which means, depending on the product, you may or may not have to show income documentation. If you're purchasing a non-owner occupied business purpose loan, you're stating the income, completely stating the income, and you're buying your investment property. However, if you're going to buy a 2-unit, you're going to have to show your income documentation. For Canadian citizens, any score needed or same as other foreign nationals? Nick?
Yeah, that would be the same as the other foreign nationals.
Okay. See here, what about nightly rentals and condotels?
Yeah, condotels, we're doing those in the ODF product now. There's a 375 adjustment to the rate for those. We still want to see the master HOA to make sure, it's a good project, that they have the reserves, they have the, no litigation going on and things like that. But we can definitely do those in the ODF.
Okay. I also encourage anybody who actually has a loan going on with CSC right now, if I have one here from Brandon Call, if you have a condition that you're unsure about, please go ahead and send that question on into your account executive, and if you're not getting the answer you need, please push it up to your manager or his manager, or he will, to get you that answer. See here. What is foreign national? How to prove the home they are buying is in the U.S. is their second home? How do we prove that? We don't. I mean, we're not looking to look under the covers that hard. If they're a foreign national and they're buying another property here, we see they have another property on their credit report. If they're calling that an owner-occupied, then we have a problem because they're not really going to fit the definition of foreign national. However, if they don't have another, or if they do have another property here and it's non-owner occupied, we're not going to have a problem with that. Do foreign nationals need to be self-employed to qualify? Okay.
They do not.
Can you use an appraisal that has already been done by a different broker? Absolutely. We love that. What we're looking for, though, is that the appraisal has to be done by an AMC. Okay, and as long as it was done by an appraisal management company, we don't care whose name is on that appraisal. It could be a competitor of ours, it could be B of A, Citi, Chase Wells, we don't care. And we don't need you to put the appraisal in our name, which makes it easier on you as well. So please, we invite that. If you have a loan right now at another company and you think that, maybe it could get done easier at Citadel or better rates, send it on over. Contact your account executive, make sure the structure is right, and we'll get it in for you. All right. Are there additional Citadel forms disclosures needed to be signed by the borrower on the foreign national program?
Just the typical forms that we have. I mean, it's borrower's authorization, e-consent. Those are the typical forms. Nothing extra for that at all.
All right. How about a property that has 6 units now, and the owner would like to add another 6 units to the existing property? Can this be done through Citadel? Nick, go ahead and start, and I'm going to finish.
Yeah, so that's a little bit of a unique situation, it sounds like. We don't do construction loans, but if they were trying to do, a cash out on a property to then,
improve it.
And get it. That's fine. It might be as a business purpose loan, where they would be self-employed, have a business account, so that we know that 50% of those proceeds are going towards the business purpose of adding on those 6 units.
Let me jump in on that one. So I'd say there's 2 ways that you could get that done. You're either going to be doing it as like what we call a fix and flip or fix and keep, and that's if you're going to be purchasing the property, and then you're going to show us that you have enough funds yourself to make those construction changes and improvements. And as long as you do, and the funds are backed up, or basically you're qualifying that off a contractor's bid and the appraisal, then you should be good to go. Now, if you're looking to cash out of the property, you're going to have to use our DSCR product. So that means the first 6 units are going to need to be covered to some degree with DSCR to show that you can make that payment on the mortgage that we're about to give you. From that point on, then you're going to be able to, or at least show the lease agreements to qualify on that. Moving forward, what is the minimum FICO requirement for a mixed-use property? Okay.
Yeah, we go down to sub 500 if it makes sense, and the ATR is there. We'll land on it.
I am an NMLS, but not a broker. Would I be able to do your commercial and non-owner loans? Well, that depends. I mean, if you're in the NMLS as a mortgage loan originator, you need to be sponsored, which means you need to work for a company. And as long as you're in the state that we're lending in, you should be good to go. If you're just registered in the NMLS, let's say you were working at B of A, City Chase, or Wells, then it might be a different story because you're going to have to work for a company that is also licensed to sponsor you and in the state that we're doing loans in. So if you have more questions on that, I definitely would recommend reaching out to an account executive to help you get that answer. Do you guys do any QM products, or are they exclusively non-QM? We are exclusively non-QM. All we do is focus on non-QM. When the final rules of Dodd-Frank came out, we went into high gear. Our product, we started making loans in this product as early as 2011, and really started to craft it, smooth the stone at the end of 2012 when we launched our rate sheet with this product, or more specifically, launched the rate sheet in the beginning of 2013, with the loans being made as early as 2012. And that's all we do here at Citadel Servicing. That's all our underwriters do. That's all our doc and funding team does, and that's all your AEs know is non-QM. And I think that gives us an advantage, not just being one of the first ones in it, but also using a guideline set that's completely different than anyone else's out there, and one that a lot of folks are trying to follow and imitate. So we look forward to doing a lot of loans for our brokers and giving you a product that no one else has to help you get more borrowers and help you get through this increasing rate environment.
Well, I want to jump in and endorse you guys on that concept as well. One of the things I recently became aware of is that a lot of your competitors are not doing the same pattern. Either one, they're not retaining servicing on some of their loans, or two, they are doing other products as well. So for the loan officer who's using a non-QM product as a two-step process, like, with a borrower with a low FICO who doesn't fit the QM box, but intends to roll them back out of it a couple of years later, or the person who's buying, the older couple who's buying a retirement home, but they're not going to move into that retirement home for 2 or 3 more years, so an ODF product would be a perfect fit for them. They want to buy a condo in Florida, but they don't want to move down there for another couple of years until they retire, right? You guys aren't going to be back soliciting that loan to compete with that borrower on getting that refinance loan a couple of years down the road, because when they do pull them out to a QM product, you guys don't do that. So that's a pretty cool thing to as a selling advantage for you guys, especially with you guys being one of the more aggressive lenders in the space as far as LTV and qualifying ability. So that's a really cool, awesome thing. Guys, there's a zillion questions in here. There are some amazing questions. I want to encourage the audience to keep asking those questions as detailed and as specific as you care to go. Even if we don't have time to answer all of these questions live in the event today, I guarantee you these guys are going to be getting back out with you and following up with your questions. So please take this opportunity, audience, to go ahead and post any and all questions you can possibly think of. The more you know about the space, the more you know about the product capabilities, the more you can use that to go get more loans, which is the whole purpose of this entire process, right? I mean, that's why I love working with these guys. And I'm sorry, but I can't not say something, Will. You know, these guys have committed to, Citadel has committed to doing a regular show series with the Originator Connect Network online. It'll be starting up in November, called the Non-Prime Nation. I'm so excited about the amazing information you guys are going to be sharing. And by the way, one of the major features of that series is going to be loan officers in the space who are really killing it with these non-prime products, sharing their best practices with you guys. So make sure you stay tuned to future updates. Make sure you stay signed up and subscribe to that future channel. Guys, you guys want to keep running away on answering a few more questions here for a few more minutes? I'm more than happy with that. Audience, I just want to, one last comment as far as Originator Connect Network. Our only goal is helping you get the tools, resources, and information you need to produce at a substantially higher level. And if there's anything my team or the rest of the team here at the Originator Connect Network can do to help our 120-something thousand members across the country improve their skills and abilities to help more families and more customers and do more loans, that's our only purpose. So please don't hesitate to reach out. Otherwise, Will, Nick, you know, I'll give you the liberalty and width here to stay on as long as you want to keep pounding out on these questions. All right?
I think we got a few more, and I think we'll take it to 12 o'clock. Let's see here. How about non-warrantable condos? Nick, you want to jump on that?
Yeah, non-warrantables are fine. ODF product. You're looking at, you know, all common areas being completed. We don't want any more than 25% of the project owned by one entity. Usually, owner occupancy is what we're looking at there, and we'll work with you on that. I've actually seen this go as high as 70% on a non-owner ratio on a non-warrantable. Don't quote me on doing that every time, but we will work with you on owner occupancy.
And by the way, if you're an AE at Citadel and you're asking questions, you have a manager for that, Michael Kirk. Okay? And I think I saw one more in there too. Sam, let's see. What does ODF mean? Robert, it means outside Dodd-Frank. So everything for lending that's outside Dodd-Frank. Let's see. Do you have loan program for a car dealership wanting to get cash out for improved operations? Property worth $5 million, currently first lien $1 million. Want cash out to 1.5. Income statement not able to qualify. Once again, car dealership. So if that car dealership also has an oil change in there, a garage in there, definitely not. That's pretty hardcore commercial. We would take that case by case. So if you want to reach out to your account executive or send us an email at sales@citadelservicing.com, we can get some more information from you and get you an answer on that. Is your non-owner business purpose program ARM products only with prepayments? I think we got that already as well. And let's see here. On condo hotels, can it have hotel-like services such as check-in desk, housekeeping services? Nick?
Yeah, usually having a rental desk down below is what differentiates between the condo hotel and the non-warrantable. We're treating them pretty much the same, so you'll be fine either way.
All right. And I think that's just taking us right to 12 o'clock. So we'd like to thank everybody who's attended the webcast. This is all available if you sign up to rewatch, fast forward through, rewind back to, and get some answers to your questions. And I'll hand it over to Eric. Thank you, Eric. We appreciate it.
All right, well, one last final thought I'd like to share with the audience. Don't forget, by the way, that in this platform, if you use the icon that looks a little bit like the Word document with corner turned. That's the resources list. Citadel's already provided you some resources that you can do to dig a little deeper into some of the guidelines and product capabilities that they offer. Go ahead and download those resources. There's also a link to the Citadel website there where you can access the, and if maybe, Will, you could have one of your team go ahead and post that link directly in the Q&A or the group chat, either one, where people can click through to get to your website and get started with the process finding their local AE if they want to get started in this sector. So guys, thanks for being on the webcast again today. It's been a great joy. You got a ton of information to dig through. So guess what? Your sales team's going to be busy for several days now. Otherwise, attendees, thanks for joining us on this one. We're going to be closing down here in about 30 to 45 seconds, so please go ahead and take that opportunity to post those last questions. You will have one final opportunity if we close it down just before you sneak that last thought or question in. Please just go ahead and post it in the survey that's going to pop up here in just a second for you, all right? Otherwise, guys, thanks for joining us again today.
Thank you.
Thank you.